Advanced Micro Devices Inc. is trading at 248.27 USD per share, marking a significant intraday jump of 4.87% as of 1:25 p.m. Eastern Time on Monday, February 2, 2026. This sharp upward trajectory comes at a time when the broader semiconductor sector is feeling the heat of high expectations, yet AMD continues to carve out a path that keeps even the most seasoned analysts on their toes. While many casual observers might see this 5% move as just another day of volatility in the tech sector, there is a much deeper narrative playing out beneath the surface. The expectation was that AMD would remain a secondary player, forever in the shadow of the giants. The reality, however, is that the company is effectively exploiting supply constraints and technical hurdles faced by its competitors to solidify its position as the primary architect of the next phase of computing. If you are looking at your portfolio on a Fidelity mobile app or checking your positions through Robinhood stock trading today, you are likely seeing a green sea that reflects a major shift in investor sentiment. The curiosity loop here is not just about the price action, but about how AMD is managing to maintain its growth trajectory despite rumors of manufacturing delays that recently plagued its peers. While the market often expects a smooth, linear climb for top-tier tech names, the actual path is filled with these sharp, informed rallies that catch short sellers off guard. It is easy to look at Nvidia stock and think the race is over, but the sophisticated participants in the individual brokerage space are beginning to realize that the demand for high-performance chips is so vast that a single dominant player cannot possibly satisfy the entire global appetite. The momentum we are seeing today is largely driven by a series of bullish analyst reiterations ahead of the upcoming earnings report scheduled tomorrow after the market closes. Firms like Cantor Fitzgerald have maintained an overweight rating with a staggering price target of 350 USD, suggesting that the current move towards 250 USD is merely a pit stop. This creates a massive tension between those who believe the stock is overextended and those who see a clear runway toward those higher valuations. If you have ever used an intelligent portfolio or a service like Schwab Intelligent Portfolios, you know that these automated systems often look for these exact patterns of relative strength and increasing volume. Today, the trading volume is significantly higher than the typical midday average, signaling that institutional capital is rotating back into the name to capture potential upside before the official numbers hit the tape. When you examine the intraday movement, the stock opened around 235 USD and faced some initial resistance, but buyers stepped in aggressively once it cleared the 240 USD level. This suggests that the market is beginning to price in a beat and raise scenario for the upcoming quarter. The expectation is that the data center segment will be the star of the show, but the reality might be even more interesting if we see a surprise recovery in the client PC segment. Most investors are obsessed with AI accelerators, yet the bread and butter of the company, which includes the EPYC server processors, continues to gain market share at the expense of Intel. This is a classic example of a company executing a long-term strategy while the market is distracted by the latest shiny object. For those of you using a Fidelity trading platform or engaging in Robinhood investments, it is helpful to look at the institutional activity. We are seeing large blocks of shares moving through the dark pools, which often indicates that major wealth management firms and Fidelity mutual funds are adjusting their weightings. This type of activity usually precedes a major announcement or a shift in sector leadership. While many people are distracted by the fluctuations in Tesla stock or the latest update from Apple stock, the real action is happening here in the core infrastructure of the digital economy. The sheer amount of capital flowing into semiconductor stocks via Interactive Brokers platform and other investing sites is a testament to the belief that computing power is the new global commodity. I want to pause here for a second and get your take on this. Comment below how many shares of AMD you currently hold and whether you think the 350 USD price target from analysts is realistic or just hype. Seeing your perspectives helps everyone gauge the sentiment of the retail community compared to the big institutional players. Looking at the business model of advanced micro devices, it is important to understand that this is no longer the scrappy underdog it was a decade ago. The company designs a wide range of digital semiconductors that power everything from high-end gaming consoles like the Sony PlayStation and Microsoft Xbox to the massive servers that run the modern cloud. Their ability to compete simultaneously in the CPU and GPU markets is a unique feat that gives them a distinct advantage over companies that only focus on one or the other. By leveraging their partnership with Taiwan Semiconductor Manufacturing Company, they have been able to stay on the leading edge of process technology, moving towards 2-nanometer nodes while others struggle with older architectures. Historically, the company has gone through cycles of extreme innovation followed by periods of consolidation. Right now, we are in a massive expansion phase. Their acquisition of Xilinx a few years back has fully integrated into their financial reporting, providing a steady stream of high-margin revenue from industrial and automotive applications. This diversification is what makes the stock a staple in many fidelity wealth management strategies and a popular choice for those doing self-investing. Even on platforms like SoFi Active Investing or through a Robinhood app, you see that AMD is consistently one of the most held and traded tickers because it offers a blend of stability and aggressive growth potential. The recent price action also needs to be viewed through the lens of macroeconomic pressures. We are seeing a stabilizing interest rate environment which generally favors high-growth tech stocks. When you look at the fees and execution on an Interactive Brokers account compared to a more retail-focused SoFi trading platform, you can see how different types of investors are positioning themselves. The high-frequency traders on sophisticated platforms are often the ones driving these 5% intraday moves, while long-term holders in Fidelity IRAs are more likely to sit through the volatility in anticipation of the multi-year story. The tension between expectation and reality is most evident in the AI accelerator market. The expectation is that NVIDIA will hold nearly 100% of the market forever. The reality is that major cloud providers like Microsoft, Meta, and Amazon are desperate for a second source of high-performance silicon to keep their own costs down. This is where the Instinct MI300 and the upcoming MI400 series come into play. These are not just alternative products, they are becoming high-performance standards in their own right. Recent reports suggest that companies like OpenAI are increasingly looking at AMD hardware to run their most demanding workloads, which would be a massive validation of the technology. If you are just getting started with online investing or looking for investment help on various investing sites, it can be overwhelming to see these huge price swings. Using a SoFi robo-advisor or a similar tool can help manage that stress. But for those who prefer a hands-on approach to stock trading, understanding the underlying technology is key. AMD is currently moving from a 3-nanometer process to a 2-nanometer process, which is expected to provide significant gains in efficiency and performance. This is why the stock carries such a high price-to-earnings ratio. Investors are paying for the future growth that this technical leadership will provide. When we consider the broader market context, the performance of the tech sector has been a primary driver of the indices for the past year. While some might worry about a bubble, the earnings growth we are seeing from these chip makers is real. This isn't like the late 90s where companies had no revenue. These firms are generating billions in free cash flow and using it to buy back shares or invest in further research. For instance, when you see a dip in Robinhood crypto or a stall in the momentum of SoFi stocks, capital often flows back into the proven winners like AMD or NVIDIA stock. The institutional support for this stock is quite deep. Many Fidelity ETFs and other large passive funds have been forced to increase their holdings of AMD as its market capitalization has ballooned towards the $400 billion mark. This creates a feedback loop where the more the stock rises, the more passive buying occurs, which in turn pushes the price even higher. This is something that users of Interactive Brokers stock trading should keep an eye on, as it creates strong floors for the stock during periods of broader market pullbacks. The 52-week low of around 76 USD seems like a distant memory now that the stock is knocking on the door of 250 USD, and this upward trend shows no immediate signs of slowing down. Now, let's talk about the potential risks, because the reality doesn't always exceed expectations. The main concern for many who invest online or use an individual brokerage is the geopolitical situation involving Taiwan. Since most of AMD's production happens at TSMC, any disruption in that region could have an immediate and severe impact on the company's ability to deliver products. Additionally, while the company is gaining share in the data center, it still faces fierce competition from Intel in the laptop and desktop markets. If Intel manages to execute its turnaround successfully, the pricing power that AMD currently enjoys could be challenged. However, the current sentiment on the SoFi investing platform and other social trading apps is overwhelmingly positive. People are looking at the success of the Ryzen AI processors and the way they are being integrated into